Well, good afternoon, everyone. Welcome back to Short Verticals. Hey, it has been a minute since we've been together. In fact, the last time I taught this class was last year, December 11th, if you can believe that. It has been a while. And then since then, I took a vacation with my family. We went down to Cancun just for a family vacation. We got back just before Christmas. Then we had Christmas on a Thursday. Then we had New Year's on a Thursday. And now it's next Thursday. So between a vacation and two holidays, it's kind of prohibited us from being together, but I'm glad we're back. And I'm glad you're joining me for this new year. And I got some great things we're going to cover today. In fact, I want to look back at what happened since that last class. The last class I taught, we went over Fibonacci retracements and some of the impact that can have, ways to read them, some adjustments you can make to maybe modify them to get some projections instead of just retracements and some things along those lines that I want to cover. I want to follow up on what happened to those stocks that we looked at then. Then I want to go into something very, very important. I want to look at the Home Depot trade that we placed back on December 4th. Now, it expires in about a week, and I've left it on because I wanted to close it out during this class, and for the most part, it's looking pretty good, but then some things changed, and we have to understand, how do we manage? How do we deal with some situations if things go against us a little bit? And so very, very important trade management. I'm going to look at probabilities and technical analysis. These are usually two different camps, but we're going to try to bring those together in this class. And then lastly, we'll look at some other potential setups and try to place some trade examples. So a lot to go through. But let's welcome back, everybody. I'm just seeing everyone say hi in the chat. You know, Ricebird, Will, Chris, Rodriguez, all these different people, John, Sandy Pick, lots of you, welcome back. Good to have you. Let me cover some disclosures as we get into this. We can get the slide together. There we go. All right. Do remember that, do I have the first one? Yes, I do. Options do carry a high level of risk, not suitable for all investors. The information we cover is for general information purposes only, and it should not be considered a recommendation. We use technical analysis, but this is not the sole means of research. Paper money is for illustrative educational purposes only. Short options can be assigned at any time, regardless of in, at, or out of the money. Investing does involve risk, including the loss of principals. Past performance is no guarantee of future results. And then also, here are your option Greeks. You can take a look at that. And if we do use a stop order, which we don't tend to in this class, do note that stops are not guaranteed. They just become a market order, and the field can be very different from the actual price of the stop. Okay. All right. Now, with that said, let's go ahead and pull up our Thinkorswim chart. And I don't want to spend too much time on the SPX, just kind of laying the ground, but let's just touch on it for just a moment here as we look at this. We can note that, really not much has changed, right? It's still slowly drifting up. When we look at the indicators down here, if we look at the MACD, the MACD is kind of winding up. I mean, let me draw a line across here and here. So you can see we have kind of this weakening of, or should I say just almost this consolidation, if you will, of the indicator. And with that said, we've seen this kind of the same thing with price action. However, that price action has continued to drift higher. Now, I did change this. I changed the moving average to a 20-period moving average, simple moving average. So because that was a one, I usually will bounce between a 20, a 50, and a 200, somewhere in there. And we can see that the price action has, for the most part, followed along with that moving average. And so again, in this case, it's working as a potential trend indicator, kind of showing that continual upward movement. And as technical analysis goes, a trend is in place until it's not, right? I mean, it's like an object in motion stays in motion until it's impacted and changed otherwise. And so that's what we see right now. So slightly, bullish, neutral to slightly bullish, not super strong bullish, but still bullish nonetheless, is kind of the outlook that we get when we look at the technical analysis on the overall market, looking at the SPX. Now, with that said, I want to take the time because I really want to cover some of these other things that are really important that we get to. And so let's do this. Let me just get rid of these for a second. We're going to follow up on some of those Fibonacci's that I talked about, as I mentioned. So let me go through this. And when we talk, this is where you see this little dot. In fact, let's do something. I'm going to hide our indicators just for the moment. So I'm going to come up to the beaker here. I'm going to come down to our MACD. I'm just going to click on the eyeball right there just to hide that. and just so it gives us a little bit more space, and squish this down a little bit, because I really want to focus on this in here. And this is where we drew the Fibonacci's, is from this low to this high right here. Okay, so let's go do that again. Let's go grab our Fibonacci's retracement right there, the kind of percent sign. We're going to take it from that low to that high. And so this is what we did last class. And what we talked about on this particular stock was the fact it run up, it pulled back, it bounced off this 61.8% line. And so, where should the target be? Well, it should be the 38% target, or the projection that I built. And if you need help building this or looking at how these settings go, then take a look at that class and it's on the short vertical class. It's called Fibonacci something. And it was taught on December 11th, right? Because I think that's this day right here. Yeah, December 11th. And so that will go over it all. But basically is that when Fibonacci's, they give us an idea of almost like a flag pattern where the price action should run up, it'll pull back, and a lot of times it'll pull back about a third to 2/3. Now, these lines are not exactly that, but they're roughly that distance, 1/3, 2/3, and then this is the halfway. And so basically, this kind of gives us an idea of that flag movement, the run up, pull back type thing. But so the question always comes up is like, when something like this occurs, where maybe it breaks up into all-time new highs, where's that potential target? Where could this potentially go when you don't have any, historical reference to look upon? And this is where they become very valuable. And I think I'm going to change something on these Fibonacci's just to make this education. I look at these all the time. They make sense to me. But I think for an educational purpose, I think it'll help to clarify just a few things. And so what I want to do is take go to my Fibonacci's. I'm going to right click on this and go to Edit Properties. And basically, I have my 3 levels, and I've kind of highlighted the middle one as gold and then the 2 other ones as kind of a lighter yellow, right? But maybe if I change those colors, they'll kind of pop with the projection idea here. So let's take this. Let's take the negative. This is the top one, the negative 61.8. I'm going to change that to like maybe a blue like that, right? But let's do the same thing with this top one, the 38.2. So where is that one in there? It's the positive 38.2 right here, or 38.2, 0.382, sorry. And so we'll change those both to blue, and you'll see why here in just a moment. And then the bottom ones, which are the negative 38.2 and the negative 61.8, those I'm going to click and make those. What should we make those? Let's make those kind of like this, maybe lighter pink or something like that. Maybe that works. We'll try that and see how that works. Is that same color? Yeah, those same colors. So if I do this, and by the way, here are the coefficients, right? This is what I set in there to get these kind of projections. So the right retracements and right projections, by default, it has a few more in here, as like a 23 and a 76-ish. And I took those off because generally speaking, they don't tend to hold as well as some of these others in the middle from what I've seen over years and years. And I'm going to hit OK. In fact, I'm going to set this to default. So I'm going to say this is the default so it stays that way. And when I do that, what you'll see is here we go. So now what we're talking about is if the retracement comes down to this bottom Fibonacci, the idea is it would run up, and this would be a potential target of the bottom projection. If it comes down to the mid retracement on the Fibonacci, it should run up to the mid projection. And if it comes down to the upper retracement, it would run up to the upper projection. One way to illustrate that point is to just show that, here's the run, right? Is the run from that support and resistance was vertically this distance right here, right? So check this out. If I just activate this and I move that and say, okay, well, if it comes back to that bottom one, we'll just put it at the bottom one. Notice that distance is the same from there up to the next one, right? And from the middle one up to the middle one, and from the upper one up to the other one. All right. So hopefully that gives you helps you understand how these play out. And so again, this gives us some potential target factors in this. And so let's look at where the price action is now based upon what we've seen. So in our class, what we talked about is, it was running up. Where would be a target? And based upon what we talked about, it coming down and bouncing off the lower retracement, the target was this upper, or should I say the lower projection. Well, this thing has continued on. So this basically filled its purpose. It's already done. It's over. So what do you do now? Well, what we can do is look for where's the next level of support and resistance and redraw it, right? So let's go ahead and remove that drawing. And now this one gets a little bit choppy because all these moves get so tight. And so it doesn't have a really nice clean run like this one that we used before. Come on, let me get this in here. This is more of a clean run, right? It kind of like ran up and then pulled back. That was very clean. And this one right here ran up and pulled back. Now there's some support here. We can run that up. Let's grab our Fibonacci again. Let's grab those retracements, run those up, and we kind of have it right here. Now you'll see it never really pulled back, right? This one, we could go up to that high and see what happens. This one tried to come back to that 38, not quite. And so it really hasn't given us a full retracement on that. And so what would happen is I would just continue to pull that up until it gets a retracement that comes down, just looking for that, just making it a bigger and bigger run as time goes by, okay? So let's do that on a couple more of the ones that we looked at in the class. Let's do that again on PANW. And on PANW, this was more of a bearish run, okay? We were looking for it to run from this high down to this low, and this was our retracement. Here's where we had class. Let's zoom in on this area, give it more focus. And so this is where we drew it from. I just want to recreate what we had at that time. And so this one rallied back up to the 50% retracement, okay? And then it dropped down. And so at this time when we had class, this is what we were looking at. We're saying, okay, well, where should this go? Now, the way one would look at this, you'd say, okay, well, this would be the first potential support level, right? That old support. And then from there, it goes down to, well, this one would be, since it bounced off the 50, we'd look for it to come down to the 50% projection. So that would be it, bounced off the gold, look for it to drop to the gold. That would be the ultimate full move of that pull. Now, you may be asking, Brett, why are you going over this technical analysis so much in the short options class? The reason is because a lot of people can use technical analysis as a setup for the option. Because really, if the stock doesn't go the right direction, we're gonna lose money, right? It needs to go in the forecasted, the projected direction. And so this is where that technical analysis can really come into play to try to give us a gauge as to where the possibilities are that it could potentially go. Now this one, it came down, it actually right there hit the first support level and has bounced up. All right. And so there's a potential now it could roll over here and drop down again, but it did fulfill its purpose of running down and hitting the first potential target on that projection. Let's also look at Apple. Now this one's interesting. You may look at this and say, what in the world? But let me redraw this now that we have some new settings on that. So let's go back to the class time right here. Okay. So this is what we're looking at during class. We went from that support up to resistance, and the question was, what do we expect? Well, we expect it to come down and bounce off one of these levels, right? Well, it broke through to 38.2, so the thought is, okay, then we'll look for it to come down and bounce off the 50%. And did it bounce off there? Well, if not, then bounce off the 61.8, right? And so we're watching it, and for a moment there, it comes down, and it actually goes sideways for several days, and that's where we were in our class, is going sideways, saying, could it potentially bounce? That was the setup, right? Waiting for it to make its move. Now, this is an interesting spot here because our mind wants to say, oh, look, it's bouncing, but it hadn't bounced at that point. It was just kind of hanging out at that level. It just wasn't going down anymore. It hadn't gone up. It just wasn't going down anymore. Okay, so that's important differentiation that we need to make sure we understand. And now watch what happened there. Okay, continued on down. So did the Fibonacci's work? Well, sure, they worked. They worked just fine. They just told us these are potential support areas that we could look for. And you know what? The price action broke through all of them. And so it told us, hey, you know what? This is not, the support's not holding. It has more bearishness in it. And so once it breaks through this, in fact, in a small way, it gets kind of tight, but in a small way, you can see kind of broke through here, dropped down and rallied back up, and then used that 61.8% as resistance, then headed back down, right? And so very interesting movement there. And so now what we'd be looking for here is actually to get rid of these. And let me remove the drawing and then draw this from that resistance down to the next support. And here's the point. We don't know where that is. I can't necessarily anchor it right here because it hasn't pulled back up. But where it finds some support and rallies, that's where we can anchor it and then look for it to rally back up and see where some potential resistance is. Last one that we're going to go look at, the really important topic I want to hit today is MRK. And again, let me draw the lines from where we have with the new look that we have that we just created today. And so again, this is what we are looking at in class. It rallied up. So this is a really kind of more of an ideal, setup if we're trying to learn how to use it, where it has a solid move and it has some good distance. It's not like, okay, it went up 3 days and pulled back, right? I mean, it has some solid moves. So we drew those. Price action came back, and now it's starting to bounce off of that upper retracement, or the 38.2%. And then from there, what happened? Let's see. Well, it ran up. Okay, so now as it breaks above this old high, so that was our target number 1. If it goes beyond that, where's target number 2? Will it be the upper projection, right? So to be the blue projection up into the future, and that's where we're at. It's working its way towards that. And so there's still some potential for more upside on this. And that's where this becomes very important, very handy when, again, you're at a spot where you really don't have a lot of historical data to go from to look at, where's that potential resistance as it, runs off into the dark skies, right? Where there's nothing necessarily there. All right. So hopefully that will help kind of bring together what we talked about last time and seeing it in hindsight and how it's kind of played out. Question comes in, hey, how can I find Fibonacci under studies? It is a subset. No, so this is a good question. So the Fibonacci is actually down here. There's a couple different spots you can find it. You can do it. It's really under drawings and drawing tools. The fast way for me to get there is just go to this down here. You click on this. This will just stay on the last thing you click on, right? So if it's a pointer or if it's a line, but really just come down here, click on that, and it's this one right here. This Fibonacci retracements is what we're after, right? Take profit on T1, need to hold my runners longer. Yeah, I get that. In fact, we're going to talk about holding runners or letting things go. And so with that, let's talk about that. Let's follow up, very important topic, on the trade that we had back a while ago. So if you recall, which you probably don't because it's been a while, there's been a lot happening, Christmas, New Year, and everything else, right? This is what we're looking at. So we saw Home Depot coming down, finding a spot of support, rallying up, and starting to roll over. And so we did a bear call spread on Home Depot. I want to say we sold the 360, bought the 365. So we needed price action to be below 360 at expiration, which is still January 16th. It's a week from tomorrow. Yeah, January 16th. And so, that's what we're planning on, right? Well, so it came down and it came back up, and it was at resistance. Now, this is what I want to talk about. What do you do at this juncture? Now, there's different things to do depending on, a lot of parameters. And this is where it becomes very difficult to just put everything in a box and say, if this happens, then do that, because it's like, it doesn't always work the same. It depends on what's the volatility of the stock, how much time is left till expiration, are there any economic announcements to be concerned about? I mean, all kinds of things, right? So at this point, I looked at it and thought, well, okay, here's the deal. It's right back at kind of where we got in, but it really hasn't broken above resistance. And so this is kind of like, it's just back there, and this could be resistance and roll back over. And there's still plenty of time, right? So I let it ride. Now, it did have a couple interesting days in here where is it? Right here. This one looks scary where it says, it looks like, oh boy, it broke it. Did it break it? No. If I were to put on a line chart, what you would see, the line chart would look more like this. It would look like this, and come down here, then look like this, and then come down here, and it'd look like this. And so it wouldn't even go up there because why? Because that's the close. The line chart just puts the close on there. And so really what we'd see is it tested resistance here, it tested resistance here, and this wouldn't even show up as a test of resistance on a line chart because it just gapped open in the early morning and then fell all day long. And so it still closed, it remained below that resistance at the end of the day. So in that case, I left it alone. It was still good. Then what happened? Well, it dropped down and things were looking pretty good. Now I came back on January the 2nd and I saw this. I'm like, wow, okay, this is looking good. A couple things though to think about is it was really more sideways, right? We'd had 2 down days, but for the most part, I think you can see it really hadn't made the move we wanted. Like it dropped 2 days and then went sideways overall. And so over this whole week and almost 2 weeks, the action wasn't really going in our direction. And now the other question is we're getting closer and closer to expiration, which that brings up a little bit of a challenge because the closer you get, the less time you have to do something if it goes erratic, right? Well, we were getting close this week. And I thought, well, I'll hold on to it because there's today. I want to, I think it was like right here is where it's like, I want to get out, but I was close enough to this class. And I really, really like to manage the positions during class. I just think it's so much more impactful as a teaching, experience versus just saying, hey, by the way, that trade we took, last month or whatever, last week, I, exited on Thursday, or I guess today's Thursday, Wednesday, right? And you just have to kind of understand that's what happened versus showing you. So I wanted so bad just to wait and see and show you what happened. Well, look at what happened today. Boom, boom. And so this trade went from about a $200 gain. Well, you can see right here, a $200 gain to a $165 loss. So it's gone negative $350 today, right? And this is what's going to happen as you get closer to expiration. Oops, I didn't mean to take down my Thinkorswim. Let's bring that back up. As we get closer to expiration, that if it moves back towards the at the money strike price, those numbers can shift dramatically, right? And now here's the question. So what if it closes down below here? Well, technically we could say it didn't break it again, just like this day where it opened up above it, it might fall back down in the next hour and a half. Now it's not looking very promising, right? And also the question is, what if though it closes right here? So what would we do? Well, now we have 1 week till expiration. It'll be Friday to Friday. We don't have a lot of time to kind of wait and see if this plays out. And so at that point, that's where some traders may look to say, you know what, I gave it a go. And honestly, in here, typically speaking, if it's not really making the move, you might consider exiting like I was thinking in here somewhere, where I'm just saying, I really want it to go like this, right? I really want it to be doing this, but it wasn't doing that. But so as it started to rally back up, that could have been a sign to say, you know what, I had a goal. It wasn't reaching that goal. It was still profitable. And now I'm running out of time. And so maybe we take it off. You see what I'm saying here is that you have to assess so many different things. And one of the things I want to address here is not only just the movement, but just some probabilities and stuff. Because some look at this and say, well, what was the probability of it being, below this level at expiration, and how does that play out with the technical analysis? And some people just look at one or the other, and I want to show you how we can blend the two. Okay, moving up. Paul says, hey, moving average, moving up, time take loss. Yeah, and I'll look to remove this trade. We'll see where it closes at the end of the day, and I'll just probably take it off at the end of the day. But it's not a max loss. It's not even close to max loss. We just gave back. We were up, a couple $100, right? So we gave back a lot of profit, and then we went into some of the loss. All right. So here's what I want to show you. I want to show you something that kind of throws people off. So like if I were to come into here, let me delete this. What I want to do is we have like our delta. A lot of times when we're looking at these trades, we're looking at the delta and saying, okay, what kind of delta should we go for? And we're looking for some kind of a higher probability trade. Remember, the delta kind of gives us the approximation of what it could potentially, what is the potential probability of this expiring, in the money, right? And so if we're looking at something like, right now that 360 strike price is at 44% probability of expiring in the money. But this is the big thing. Understand, this is the difference between expiring in the money and being touched. And so I want to bring up something different and show you. Let me show it on a different chart because I think it's going to make more sense. So let's go over to one, because I don't want to get hung up on the trade that we already have in here. Let me go to, I think it was JP Morgan. Let's look at this, JPM. No, it was QCOM. We'll come back to JP Morgan in a minute. Okay, QCOM. Okay, so I'm going to look at QCOM, and we're going to look at this and say, okay, what if we were to go place a trade right now? It's generally uptrending, maybe bounced off a shorter term support level in here. I could draw this as a resistance back in here. some support in here. So this red line could go further to be a support and resistance and bounce off that support and rallying back up. And so that's what we might see on a short term, right? And so let's go say, okay, let's go place a trade and sell the 170 and maybe buy the 165. So I want to go over to the Analyze tab because I want to kind of build this. In fact, I already built it. I've been looking at things all morning to show you guys. Here we go. Okay, so we got QCOM. I'm going to go out. I'm going to sell this one, the 170, and I'm going to hold down the control key. I'm going to hit the buy on the 165, and now create our trade, right? Now, unfortunately, the price has dropped a bit. It was like about 130 earlier when I was looking at it, but that's okay. I really want to look at this for a different purpose, because if we're selling the 170, if we look at our, oh, we don't have it in here, do we? If I throw on our Greeks, let's put on the Greeks. Right. So if we look at this one, we have this delta of 25, which, like I said, is approximation, but essentially say we have roughly this 25% probability that it'll be in the money, which is 75% probability it'll be out of the money. Well, does that mean that it's not going to be in the money sometime between now and expiration? That's a completely different discussion. Let me point it out this way. So I'm going to come in here. I'm going to go to Save Column Set, or I'm going to do Customize Column Set. And let me just remove something here. We'll just remove the gamma for a second. And I want to find is probability of touching. So we could put in the probability about in the money, like similar to the delta, but I'm going to put on probability of touching. And what this tells us is what's the likelihood of price action touching that point. In fact, let me bring this over. Let me do something. I want to bring it over closer. So I'm going to grab this and move that up. So it's right next to our delta, so we can look at the two together. In fact, I'll just get rid of these. Just clean things up, make them nice and clean, right? Okay, there we go. There. Okay, cool. Now, so what you'll see here is that the probability, let's get to at the money. There we are. The probability of touching is highest at the money. Why? Because this strike price is the most likely to be touched when the price is right next to it, right? But the further away we go from that is the less probable it will touch that. All right. So if we're looking at the 145, well, the 145, if the price was down there, it's not as likely. So it's kind of like, what's the likelihood of it dropping down to 145 or touching at 145? It gets less and less. And also, if you go this way, it gets less and less. And so the point being is there's a big difference, though, between the probability of something like this one. Let's look at the 160. Okay. This one, the delta at expiring in the money is around 13%, but the probability of this being in the money at some point is 32%. You see what I'm saying? There is a bigger probability at some point between now and expiration that that price could be in the money. Let's do this. Let's take this over to the Analyze tab, and I'll explain it just a little differently. Whoops, we don't want to duplicate that. We want to analyze it. Let's go over to Risk Profile, rather. Okay, so on Risk Profile, now sometimes you got to be careful. Sometimes when you come over to this Risk Profile, in fact, earlier when I clicked on this, it did this to me. And so just to remind everyone what this is showing us our profit loss graph, right? And so if I come down here on these three lines and I set slices to break even, and I do that at 221, that would be the expiration date. And this would tell us, okay, and then I got to get this right as well. So this is where I was going to say, I was looking at those numbers saying 90. That's way off. Well, yes, because sometimes this doesn't update. And I bring this up because this will happen once in a while. All right. I just want you to be aware of that. So we want to take that to the expiration, which in this case is our February 20th. And so always go to the day after that, the Saturday after that. And what we have here, that changes these probabilities. So it's 71% probability. It'll be where? It'll be between this line on up, and it's a 29%. They'll be between this line, basically 170 or lower. Let me go reset that. Moved on slightly. Oh, that's break even. I want to do it actually at the strike. Okay. So the gray area shows us what the range that the price action with regular standard deviation should move between. And I want to point it out this way. Let's do this. So here's the deal: is price can move here and price can move here, right? So if I were to draw this with price action, now let's change this to blue and come in here and say, okay, price the current stock price is what, 168 or something, right? It's right here. So if it's going back and forth like this between now and expiration, if price is moving in that range, if we look at this, we'll see that yes, about 30% of the time, it's spending its life in the yellow box, and about 70% of the time, it's spending its life in the purple box, right? But the question is, what's the likelihood of it being in this zone versus that zone? And that's really where that delta comes into play, and it's the probability of expiring versus touching. And it's almost like musical chairs. Where will the music go off? Where will you be when the music goes off, right? So it doesn't mean that it won't come into this range at all. It just means that as it can fluctuate, it has a higher likelihood with standard movement to be in this area. And so let's go out and actually place that on the graph. Whoa, wrong thing. I apologize. Take that off. I meant to erase that. So let's go place that on the graph, and we'll see how this translates over on the chart itself. So really what we're talking about here, and I want to get a little bit more distance in there so we can add, not that one. I'm sorry. I got to go up to my gear here. Then from the gear, I want to go over to time axis, and I have about 20 bars. I'm going to go like 35. That should give us probably enough, maybe not quite, but it's fine. It's fine. It'll give us some distance out into the future to look. And so really what we're just looking at is this. From where it is right now, so this is, and let's just pretend that this line over here is expiration, okay? I don't have it exactly on the expiration date, but understand that's expiration. So this was that range. If we looked at the price range on the Analyze tab, let me go back to that real quick. That range was from about 160 up to 209, right? 160 to 209. That's the range that with the standard deviation that this stock has, that it should move between. And so that's why I put this line about 160, maybe it's a little bit low, to 209, 210, somewhere in there, okay? I drew these lines a little bit earlier and volatility's changed slightly, but that's where it is. And so now, looking at that same concept, price action is right here, right? Well, if it does its standard movement like this, again, the question is, where will it be at expiration when it hits this line? And again, you can see that most of the time it will spend if it just is moving back and forth, it will spend its life up here. And so the probabilities are higher. But again, that doesn't mean that it can't come into this zone. And so this is what I mean, where we have to look at everything together and say, okay, well, if it comes down here on this time, like very shortly after we enter the trade, we still have time for it to kind of play itself out. But if it were to drop down here, you could still say, hey, it came down to 160, right? But at this point, we don't have the time, the luxury to sit there and say, I have time to, wait for it to come back. And so you can see how we're kind of marrying this technical analysis with probability. They're actually both there, and you don't necessarily see it, though, like objectively. It's not just sitting there on the chart, but it is kind of there. The way we tend to look at it and see it is through just some technical analysis. We say, okay, well, it's up here. You know what? There's some range. It has to move. It'll take a little bit of action to get down here. It has to break through support. It's less likely. And so kind of intuitively, we kind of see it kind of being up in this area. And so we kind of just see that the probability is it's probably going to be up here. Okay. Right. So hopefully that helps you understand how we're bringing together actually the way people play probability analysis, the way people play technical analysis. A lot of times there's some overlap. There's a lot of mixturing, between those two camps, even though those two camps oftentimes may not get along or think, they both think they're the bomb. But reality is it's actually both of them can be very good. All right. So let's do this now. Let's change pace. So we've looked at some different things. We were just looking at JP Morgan, right? Let's go back to JP Morgan. And so potentially here, JP Morgan has a ran up to resistance, pulled back, ran up to resistance, pulled back, ran up to resistance. This is a fairly solid resistance area. In fact, after it broke through that resistance, it came back, found support. Do we have earnings? I didn't see that. Oh, you just want life to be good. And sometimes life doesn't play out the way we want it, right? Well, keep an eye on this one. This is a homework assignment. Let's keep an eye on this one, see what happens. That is when the 13th. Yeah, so that'll be before we meet again. But maybe price action comes down here and it'll give us something to look at as it potentially bounces off support. and rolls back up, which would be a potential setup for a bullish play. Now, one I want to point out, and this one is important because Coca-Cola, look at this. Coca-Cola. In fact, this morning I actually tweeted out about Coca-Cola. And so let me share that with you right here. By the way, when I was down in Cancun with my family, our middle son here just got engaged. And so we'll have our second daughter-in-law a little bit in a couple months here, and that'll be fun. We just have 3 boys. My wife and I have 3 boys, and they've been awesome. We've loved it, and I miss them as they kind of grown up and out of the house. And I'm an empty nester, and I have not adjusted well. I'll tell you that. But looking at Home Depot here, here's this Head and Shoulder. Or no, it's not Home Depot. Sorry, it's Coca-Cola. It ran up, pulled back, ran up, pulled back, ran up, pulled back, and so looking for this as a potential drop down. However, it's not uncommon for these to rally back up and retest resistance. And so this one is one to keep an eye on as well, because this could potentially roll over here and then drop down and drop the distance of that head up in here. Oops, come on. There we go. The head to the neckline right there. So one way to easily do this is just draw a line, then duplicate it and drag it over and drop it down. And that would be the potential target on a bounce, if in fact that does happen. So we'll have to keep an eye on that and see. So there's a potential setup there. Too bad that's not, it totally changed, like our Home Depot, totally changed throughout the day, right? Let's look at UPS. So UPS, like so many things, has been rallying. They still have a little bit of time. We just have some earnings coming up. That one's been rallying. So many things have been running up throughout the day, and it's really frustrating when I sit there and look at all these potential trades just kind of take off. In fact, one of them that's been interesting has been looking at oil. I was looking at oil stocks, as they looked at the potential now higher production of oil, coming into the market. So oil stocks were dropping down. Well, the question, is will that really happen? It's preliminary stuff. And you can see, I was hoping this would actually come down and bounce off support down a little bit lower, but it looks like it's actually finding some life a little bit earlier. So this day is not playing out the way I was hoping for when I started preparing for this class. I was looking for all kinds of setups, but we can either go with QCOM or the UPS. They both still have those earnings, but we can even play it. I don't like playing them up to the earnings, and the J&J is still too close to that earnings. We're going to come back into earnings season. Let me look at. Let's look at Meta. Meta has some potential. This is kind of like it had a dead cat bounce where it dropped down, rallied back up, came down, rolled over. I'd like to catch this a little bit higher, but let's see what this plays out. Okay. And this is a lot of times, how it has to be. You have to just kind of look through and see what's out there, and then run some numbers. And so maybe we sell somewhere up in here like 675. Let's see if we can sell $30 away. That might be a stretch, but we'll see. So Meta, now what we'd be looking at here, if getting that kind of sweet spot of 30 to 50 days, we have the February's in here, and so grab that. 43 days till expiration. They mentioned 650. Was that what we were talking about selling? Was it 675? What am I saying? Price action is closer to 650. So 675. So let's add just a few more strikes on that. We'll go 18. That should get us there. So if we sell the 675, it's a 5-wide strike. Did I get a set? Nope, I got the ask. Hold on. Sell that one. Hit the control. And buy the 680. What do we have? $1.72. $1.72. It's still not bad on a 5-wide spread in there. What do we have as a delta on that 675? 39. Okay, yeah, within that's still in a ballpark of like a 30 to 40 delta that some people might look for. So let's run with this one. So the probability is, we still have about a 40% probability to be in the money. We have the stock, dropping down below resistance, been hit many times. We got a $1.75 credit on that. Let's lock that in. Trying to get that $1.75. That'd be nice to have a round number. And on that $1.75, if it is a 5-wide spread minus the $1.75, we can do that math in our head. But just to illustrate it, it's going to be $3.25, right? And so if we have a $1.75 divided by the risk of $3.25, about a 50% return on risk. And so the return is a little bit higher, but also the delta, the probabilities aren't quite as strong. They're a little bit lower than if we're going for a 30. But that's where the trade-off is, and there's no sweet spot. This pendulum where we go for higher returns will tend to be the probabilities drop, and if it's the opposite, if we go for higher probability, well, the returns tend to drop. And so if you can find a line or a bar that bends, please let me know, because I'd love to see that. Where we have high returns and high probabilities. Love to see that. I haven't seen that yet. In our class, we've always used $1,000 for risk, so we're going to go $1,000 divided by the 175. And that's gonna, well, wait, what am I doing? 5.7, yeah, about, not risk, that's a return. What am I thinking? $1,000 divided by the 325. Correct myself there. Sorry about that. 3 contracts is what that would do. So let's go ahead and change this to 3 contracts. 1, 2, 3. We should get that filled. I'm gonna go ahead and confirm and send. And no orders concerns to be looking at, but we have a potential gain on this of $525, a max loss of $975. So we'll go ahead and send that off and see what happens with that one. And we'll monitor that one as class goes by, right? And so let me highlight this. Oops, let me I'll put a note on there of what we did after this class. But hopefully you picked up some very important concepts today. I think there's a lot of things in here that are valuable. And I really want you to, understand blending those technical analysis with the probabilities is a great way to kind of look at this kind of on a very holistic way. And so, utilize that, see what it does for you as you do your analysis. And then also, we'll keep an eye on those stocks. Let's see how they play out, if any potential setups occur between now and next time we meet, and then we'll follow up on these. But thank you so much. Please like and subscribe if you haven't done this, and also follow me on my Twitter account, my X account. It's at Brett Crowther CS. It's my handle. So as I post some of these things, you'll be able to see them real time. You don't have to wait week to week to see those. But thanks again so much for joining me. Good to be back with you. I'm glad to have you with me each and every week. Until next week, take care. Have a good one. We'll see you.